makers and market movers. This is The Pulse with Francine Lacqua.
A very good morning. Welcome to The Pulse. I'm Manish Krani in Dubai. Here's what's coming up on today's programme. European stocks, they're muted and risk sentiment wanes as traders await Powell's speech and Jackson Hole for clues on the rate outlook. Christine Lagarde speaks exclusively to Bloomberg in Wyoming as some of Europe's top central bankers hint at more rate hikes. In just a moment, we'll bring you the latest business sentiment from Germany. Plus, Donald Trump surrenders to jail in Atlanta to be booked on charges that he conspired to overturn the 2020 election results. The former president posted his mugshot on social media. A very good morning. Welcome to the show. Let me take you straight to the European market complex. We're waiting to hear what the narrative is from Jackson Hole. That is the backdrop that we're looking at the moment. I can tell you in terms of the nervousness, it's whether Powell channels his inner Alan Greenspan rather than Volcker. We saw a little bit of a movement and news flow from China in the past couple of hours about bolstering the mortgage market in China, and that has given a little bit of an underbelly to risk. Just check out Watches of Switzerland at the bottom of your screen. Now, this is brutal. Watches of Switzerland down 27% as we're seeing Rolex move to buy a luxury retailer, Bucherer, 100 stores. Now, Watches of Switzerland say this is not a strategic move by Rolex into the retail market. Well, if you don't call buying 100 luxury stores a move into retail, I don't know what you do. But just to give you some context, Rolex produces 1 million timepieces a year. What does it do to those relationships of the the shops that actually sell you your Rolex, like Watches of Switzerland, on Regent Street, indeed those mega stores around the world. Now, let me just bring you some of the breaking news in Germany. We've already had stagnation in Germany in terms of the GDP, but this is the IFO Confidence Index, 85.7. The estimate was for 86.8. Now, the current assessment index, 89, and the estimate was 90. So again, underneath on both of those. I want to look at the expectations. This is perhaps the most important. 82.6, and the market had anticipated a little bit higher than that. So on the expectations front, 83.6. This is obviously going to be another dagger in the heart of the German recovery story. It will be the only G7 country to contract in 2023. That is according to the IMF. Let me take you across the assets. This is what we've got. We're waiting for Jackson Hole. What will the narrative be on the rates narrative? We've got a poll in from 22V Research. 78% it's going to be about data dependency, but the short end of the curve is inching higher, above 5%. That has a direct, is it rates or risk that's going to drive the dollar? I'm telling you, it's rates. Get back to basics. It's rates. I mean, the dollar, by the way, is the imperial currency. That is the view from Dan Moss. The dollar is the fortress as China struggles with its situation. So money flows to the dollar on a risk-off narrative on the known unknowns within China. There are many more unknowns within China than knowns. Yields spike a little bit higher. Iron ore is up 2%. It's had a restocking narrative come through from China. Combined with that, the biggest weekly gains since June. The Chinese mills are restocking. And of course, you've got this new policy on mortgages. If you've had a mortgage before, don't worry about it. You can get another one if you're in China. It's just changing what a first-time buyer really is. Of course, dollar Turkey. Let me just show you 2 days of the Turkish lira. 7% rally yesterday on a 750 basis point hike from the Central Bank of Turkey. 25% is where we are on rates. Quite a dramatic day there. To Kansas City Fed's annual Jackson Hole meeting today. Will it be as dramatic? Joining me now is Maria Tadeo. Maria, good morning. Good to see you. What are we going to be watching for? We've heard from Nagel so far, but what do you think the main belly of the message will be from Jackson Hole?
Well, yes, Manis. And look, I think a year ago, when you look at the same symposium just 12 months ago, it was about really showing markets and proving and convincing that central banks were on the case for inflation and that they could tame it and complete their goal and their mission. And obviously, that is price stability. I think a year later now, we've seen this super cycle of very aggressive hiking policy. And the debate is now changing from how much to how much more is left. And then for how long. I think specifically, too, when you look at the European Central Bank, it is interesting the data that you mentioned and referred to when it comes to Germany at the start of the show, because Manas, ultimately, this is a country, and yesterday we spoke with the head of the German Central Bank, who is still saying it is too soon to talk about a pause in this hiking cycle, but at the same time is seeing this downturn in the economy. I was also very struck by the comments from Mr. Nagel yesterday with Michael McKee saying, I do not believe Germany is the sick man of Europe. And just to give you an anecdote here, there is a front page story by The Economist where Germany is referred to as the sick man of Europe. That has ruffled feathers in Germany, especially with the government. But I was surprised to see that also the central banker decided to weigh in on this and defend his country.
Yeah, and of course, everybody's going to have the different opinion. And we've already heard from some of the policymakers earlier, including that Bank of Portugal governor. What was the story?
Yes, and again, Bank of Portugal tells you a very different story. We spoke with Mario Centeno, who was pointing to the downside risks to the European economy. He did not openly call for a pause, but actually seemed to say it's something that the ECB will have to factor when it puts out their new forecasts in September, but also makes that decision, which then obviously takes us back to Christine Lagarde today in Jackson Hole. I think, man, is that you're starting to see maybe not clarity of what they do in September, but really the lines of debate here, and also the challenge for the head of the ECB. It's always the same situation here. She has to gather this governing council. She has to get to a consensus and get to a landing zone where everyone feels comfortable. But obviously, when you set monetary policy for 20 different countries, that's not an easy job.
No,
we have to be cautious this time around, because downside risks that we identified in June in our forecast have materialized. This is an inversion of what happened throughout the pandemic recovery, because usually we have been surprised in the upside.
And that was Mario Centeno, head of the Bank of Portugal, again, on some of the lines and the debate that is going to feature, I'm sure, very heavily today. And how will Christine Lagarde put it all together in a speech? Will she give us clarity in terms of where they go from here in September? I really doubt it, because she will probably stress it's about the date, and they have the forecast that will come up in September. But it'll be interesting to see the tone of the speech.
Yeah, maybe her speech is actually probably going to be much more important and what she says to Tom when she sits down, perhaps rather than Powell. They've both attacked the dragon of inflation, but neither of them have beaten that narrative. Have they, Maria? They have ways to go there. Maria Tadeo on the setup for Jackson Hole. And we'll have full coverage from Kansas City Fed's Jackson Hole Economic Symposium throughout the day right here on Bloomberg. The surveillance team are on the ground. And also from Jackson Hole later today, don't miss our exclusive conversation with the ECB President, Christine Lagarde, at 9 p.m. UK time. Staying in the US now, but let's turn our attention to politics. The long-awaited mugshot is here. Donald Trump turned himself into an Atlanta jail to be booked on state charges that he conspired to overturn the result of the 2020 presidential election in Georgia. Trump maintains his innocence.
What has taken place here is a travesty of justice. We did nothing wrong. I did nothing wrong. And everybody knows it. We did nothing wrong at all. And we have every right, every single right, to challenge an election that we think is dishonest.
Bruce Einhorn is with me. Bruce, as ever, President Trump there, trying to win the narrative and make various statements. But for the first time, Greg and I were looking at this, for the first time since January the 8th, 2021, he came back on X, formerly known as Twitter, and he posted his mugshot. What is that about? Capitalizing on this infamy, trying to hold the narrative, his narrative?
Well, Mattis, there are ups and downs for the former president of being back on what was formerly known as Twitter. Obviously, he used to use it quite a lot. He was suspended from it shortly after the attack on the Capitol on January 6th, Elon Musk, upon buying Twitter, reinstated the former president. Up until now, he has stayed away from it, kept to his own social media site, Truth Social. So he's posted his mugshot. The risk for the former president, if he's using social media even more, is that part of his conditions for release in Fulton County, Georgia, is that he has to avoid doing anything that could potentially interfere with the trial. And one of the conditions was to not do anything on social media that could be seen as interfering with witnesses or other things that would violate the terms of the deal. So having an even bigger social media presence could potentially be risky for the former president. The fact that he has a mugshot itself is significant. This is, of course, the fourth criminal indictment that the former president has had in the last few months. In the previous ones in New York City with the alleged hush money to adult film star, the documents case in Mar-a-Lago, the January 6th related case in Washington, D.C. In all of those cases, the decision was made not to take the former president's mugshot because, of course, he's a very familiar person. Most people know and recognize him. In Georgia, the sheriff in Fulton County said, no, we're just going to treat him the way we treat everyone else. He's getting a mugshot. So that mugshot is now available on the former president's social media site. The other big news to come out of Georgia is Fani Willis, the prosecutor there, has now asked the judge to move forward the trial date, which originally she requested to be in March. She's now asking it to be in October. That's because one of the co-defendants in the case, Kenneth Chesebro, has requested to have a speedy trial to sever his case from the others. And the judge has granted that request. Fani Willis wants to now make sure everyone is tried at the same time.
All right, Bruce, let's see what comes next. Bruce Einhorn there, tracking the latest on Trump, handing himself in there. Coming up, it's all about Jackson Hole. Traders are waiting for the Fed Chair Jerome Powell's speech. The clues on where rates go from here. Oliver Kettlewell is my guest from First Abu Dhabi Bank. He joins me around the desk ahead of Jackson Hole. Treasuries have retreated for a second day. That's ahead of the Fed Chair Jerome Powell's speech later on at Jackson Hole. Joining me now is Oliver Kettlewell, Executive Director for Fixed Income Fund Management at First Abu Dhabi Bank. This is your peak day for peak nervousness. 11 hikes, 5.25, 5.5 offered, the highest in 22 years. What you need to do now as a bond trader is decide whether we're trying to find what is higher for longer. Is that what Powell, you think, if you had to bet, is that what we're going to hear, higher for longer, data-dependent verbiage?
Yeah, I think so, because he's not going to be dovish, because then he risks undoing all the hard work that they've done over the past couple of years by retightening financial conditions. So I think he'll try and be balanced, but more on the hawkish side. But I think for fixed income, it doesn't matter. I think a lot of the repricing over fixed income you've seen this summer has been because of the debt downgrade, the supply assurance coming out, the big budget deficits in the US. That news flow is washed through now. So let's see what Powell has to say, but we're pretty comfortable with fixed income right now. You say it's a summer sale, and you'd be a buyer here. You've been on the phone to Stephen Major at HSBC. I presume the two of you got like a lot of action in the market. But with that in mind, you say it is a summer sale. Now, then you go to the other side, and you've got Bill Gross, a veteran of the bond market, who says get ready for 5. You've got Bill Dudley telling me 4.5, and a lot of other people pitching in there. Why are you comfortable with a summer sale? You and Bob Michael buy every dip? Yeah. With the other side of the trade too. Is it Bill Ackman? I think he was short US 30-year treasuries, right? Yes, he was short. Yeah. You're a buyer of his paper every day. Yeah, I mean, look, I think above 4%, it's great value today. It's, 430 or something, I think. Look, the year-end forecast for 30-year yields on BYFC, bond yield forecast on Bloomberg terminal, is 4%. So if you get a 30 basis points drop in the 30-year, that's a 5-point gain. With a 2% carry thereabouts, you're making 7% potentially there over 6 months. Sorry, that's a lot of maths to throw at you in a short time. but the
math is not my strong point. But I get it. I get a capital carry plus my 4% yield. I get a capital carry of 2, 2.5, whatever. So I'm at 6.5. And where am I going to be in 30 years, Oliver?
You don't have to wait 30 years, Manish. You can sell it in 6 months and rotate back into equities once they've sold off.
Yeah, but you're a little bit cautious about equities. I mean, by the way, I said to the producers this morning, have we maxed out on AI and NVIDIA? You know, have we had too much NVIDIA pie? Have you had too much NVIDIA pie? Are you bored to the back teeth of NVIDIA on Bloomberg TV?
No, it's always interesting hearing about these tech stocks, and I'm jealous of, stocks.
I'm just jealous of the people who are long.
Yeah, I mean, actually, I have to give kudos to my equity colleagues. They had a bit of exposure to NVIDIA, so they did really well there. But in general, we're underweight equities. We think it's been led more by FOMO, not fundamentals. Everyone's talking about Goldilocks soft landing. We think it's not going to be a fairy tale. Think of the PMIs that we've had this week, Manus. They're all rolling over. They're all sub 50, apart from the US
mortgage
services.
applications the lowest since 1995.
Yeah.
PMIs in the bin. I mean, is this the beginning of a long? I mean, I'm the arch grouch. Is this the beginning of a long variable lag? Rents will not come down quickly enough for my move to the United States of America. But is this the beginning of a long variable lag, and does that underpin then why you want to be a buyer of 10s, a buyer of 30s, and buyer of duration?
Exactly, because people renew mortgages every 5 years. They renew car loans every 5 years or so. So consumers are going to get a nasty shock when they go to renew mortgages and car loans, etc., in the next few months. And I think those sorts of cracks are going to permeate through to the economy. And that's why you don't want to be in risk assets. You want to be in those safe haven securities, i.e. US Treasuries or IG bonds from this part of the world.
And your narrative as well. I mean, the performance on stocks were flat for the week. I mean, understandably nervous going into Jackson Hole. I mean, this time last year, it took a bit of a bath afterwards. But then, do you think, and we're writing a lot about what he will focus on or what the focus will be at this Jackson Hole. Now, I am not even going to try and define or star. You're supposed to be more intelligent than me. You're a bond person, so you should be able to do this. But the or star has come down even by the Fed's own admission from 3.5%. The neutral rate, in other words, not too hot, not too cold, the Goldilocks zone, 3.5 to 2.5. Do you think there's going to be a lot of verbiage around that? But really, is that a distraction?
Yeah, but look, I think it probably is around 2.5%. But it doesn't matter how quickly we get there, by the way, particularly for the bond market. I mean, I think investment grade and high quality double Bs can easily cope with rates being held high for 12 months. I mean, that's why we're so confident on that part of the fixed income market.
Do you think the market has just forgotten what normalised rates were?
Exactly. I mean, a lot of these bond companies and countries can roll over debt at these levels. It's the single Bs, the triple Cs, the stocks which are going to struggle.
I mean, we're just showing some high yield and some investment grade there, and you want to be longer of investment grade. How much talk has there been around your shop this week about China? I am just deeply mentally scarred by a lot of crises in the world after 35 years. Is China a big risk to that kind of compression of yields in IG and high yield? I
mean, China, it's such a... I feel like...
It's a big term, isn't it?
Yeah, no, I mean, every time I've come on your show the last 12 to 18 months, I feel there's been a policy announcement. I've kind of gone, I think this is the policy announcement that can turn the market for China. It doesn't happen. So I think, once...
creatively calling second-time house buyers first-time house buyers is a robust policy response.
Exactly. They've got a new mortgage policy.
So you were a first-time buyer, you can be a first-time buyer again.
I don't get that one either. So, I mean, they had that 16-point plan at the back end of last year. Remember this massive plan, and bonds rallied and then they fizzled out. So, look, I mean, we're staying away from China for the time being.
OK, you can live without China. Let's see what we can live with after we speak to Christine Lagarde and Jay Powell. We'll hear from them today. Oliver Kettlewell there, who wants to be long the summer sale in duration, right here on Bloomberg. Executive Director, never under title, Executive Director for Fixed Income over at First Abu Dhabi Bank. Coming up on the show, plenty more from Jackson Hole, including our interview with the Bundesbank President Joachim Nagel, right here on Bloomberg. A very good morning.
The catastrophe caused by the wildfire in Maui could have been avoided. Like recent fires in Colorado and California that between them took scores of lives, there were both natural and man-made factors. They share the same failing: risk blindness. Before we get into risk blindness, we need to get to grips with what we know about the Maui disaster.
Back in 2019, Hawaiian Electric said that they were going to start identifying areas that its power infrastructure may be vulnerable to wildfire or starting a wildfire, and that included flying drones over its power lines.
By 2022, it had submitted a spending plan to address the risks it had identified. By the time the fire struck, that spending had yet to be approved. The official cause of the fire is still undetermined, as Hawaiian Electric has pointed out. The utility says it is working with officials on the investigation. But preparation for wildfires by both the community and utility was incomplete, even as similar disasters elsewhere in the US heightened concerns. Running through all of this is what in the business world has become known as risk blindness.
Risk blindness is when people underestimate risk. And that can be because they're looking at the past to try and better understand what's going to happen in the future, or because they're overestimating their ability to respond to a risk. Maui is a reminder that risk is growing and that we need to be aware of what our risk is today.
Alex Wegg from Bloomberg. Quick take there with the report. You've had the numbers from the IFO index. Business confidence there takes another hit as we see it below expectations. We'll talk to Klaus Wohlrabe next. European stocks are muted. Risk sentiment wanes as traders await Powell's speech at Jackson Hole for the clues on the rate outlook. Christine Lagarde speaks exclusively to Bloomberg in Wyoming as some of Europe's top central banks hint at more rate hikes. Plus, Donald Trump surrenders to a jail in Atlanta to be booked on charges that he conspired to overturn the 2020 election results. The former president posted his mugshot on social media. Good morning. Welcome to The Pulse. I'm Menace Cranny in Dubai. So business confidence in Germany took another hit in August, despite the economy just exiting a recession in the second quarter. Germany's IFO business confidence index came in below expectations at 85.7. This follows a set of disappointing PMI readings earlier in the week. For more now, we're joined by Klaus Wohlrabe, head of business surveys at IFO, the man behind the survey. Good to see you, Klaus. Look, the GDP is hardly inspiring. The PMIs are absolutely awful. Here we are with the IFO index, hardly inspiring me. Are we at the beginning of a much deeper and more protracted period of stagnation in Germany? Good morning.
Good morning.
Klaus, let me just check in with you. We will recheck in with Klaus in just a moment on the data. In advance of that, let's set the stage for my conversation with the head of IFO. The ECB Governing Council member Joachim Nagel said he's not convinced that inflation is under control, certainly not under control enough to halt an interest rate hike. He spoke to Bloomberg's Mike McKee at Jackson Hole Symposium.
It seems to be in Europe that the labor market and the similarity with the US is really pretty good. So we have a good labor market situation, but the economic activity is slowing. This is for sure. But this is not a surprise to me. I think when you're hiking interest rates 9 times, it's for sure that there is an impact on the here, and we are seeing this. And this is good and bad news. Inflation is coming down. Core is still sticky, and so the next months we will get more information about this.
Well, do you think going into it at this point you would lean towards pausing? There's a split in the markets about it, and there seems to be a split on the Governing Council among those who think you can wait, take a look at what's happening with the economy, and others who think we still need to do more.
I think it's, for me, much too early to think about a pause. I think we have to wait for the next number. So we agreed in our July meeting in the Governing Council that we will wait for the numbers we will see in our September meeting. And I will more or less follow this path. I will wait for the September numbers and then we will see.
You're in a kind of interesting position because historically the Bundesbank has been the most hawkish, the most opposed to inflation, and yet the German economy is one of the weakest in the Eurozone and in the in the EU now. So how do you lean in a situation like that?
Maybe, first of all, I hear a lot of talk about Germany, the sick man of Europe. This is definitely not the case. We shouldn't underestimate the adaptation capacity of the German economy. Yes, we are going through some, let me say, complicated months, this is for sure, but I'm not too pessimistic. There's also no time for complacency, this is also for sure. We see what is necessary to do, and I have a lot of trust in German politics that we go into the right direction, at least for next year. And when you talk about monetary policy, what I said is that we have to be stubborn here, even more stubborn than inflation. This is what we have to do. This is our mandate. We have to bring inflation down to 2%. And I guess there's this overall understanding in the Governing Council that this is our mandate, and we will more or less be pretty focused, and we will do our job.
ECB Governing Council member Joachim Nagel at Jackson Hole. Let's get back to my guest, Klaus Wohlrabe. He is the head of business surveys at IFO. Listening to Nagel, he's not ready to call time on rate hikes. Given the survey that you've just produced, is this the start of something much deeper and more protracted slowdown in Germany? Good morning.
Good morning. We expect that the German economy will roam alongside the zero growth line. So the current numbers also from our surveys point to the fact that there might be a slight negative growth in the third and also the fourth quarter. But it's not as a deep, we do not expect a deep recession as many are forecasting or talking about. So there's a weak development of the German economy, but not as bad as propagated recently often.
I mean, when you look at the survey data, you've got Nagel saying he's not prepared to call time on rate hikes at the moment. Do you think more rate hikes would have an onerous impact in Germany and on business sentiment?
Yeah, especially for the construction sector. We also see a slight impact also for manufacturing and the service sector. So more and more firms are complaining about weak demand. So there are less and less incoming new orders. We also see a lot of cancellation of orders, especially in the construction sector. So a further increase in interest rate might put a little more pressure on the development of the German economy, yes.
When I was with one of your colleagues, I think it was last month or the month before, I said, is Germany the sick man of Europe? And there was a very strong pushback from that title. But it does appear that Germany is unwell and potentially turning into the sick man of Europe. The IMF say it will be the only G7 country this year to contract by 0.3%. Is the patient ill?
Yeah, a little bit. So I would not call it a sick man of Europe. And as the economists put a question mark behind the statement. So what we see is that the more structural problems of the German economy, as the transformation, decarbonization, or the lack of skilled labor, so they become more and more apparent. So with respect to the upcoming years, so the German economy is not at the forefront of the in the economy of in Europe. That's right. But currently still, although we are in the last place, so to say, with the economic outlook, but there's still a lot of room of improvement for the next year.
Well, China, I mean, oftentimes when we talk about the industrial strength of Europe, led by Germany, symbiotically matched with China. China is definitely unwell. China's throwing everything but the kitchen sink at trying to get their economy stabilized. To what extent is the slowdown and lack of assurance about China impacting confidence and orders in Germany?
Yeah, we see a little impact of these China slowdown in our survey. So if you take a look at the export expectation in manufacturing, they deteriorate a little bit. So they are not as pessimistic as we've seen sometime in the past. So, but we see a slowly increasing impact of the slowdown of the Chinese economy. So it might be that the impact of the slowdown might be higher in the upcoming months.
And when we look at the influence of industry, I'm just trying to get a sense from you. We've got this whole onshoring, friendshoring narrative globally. To what extent can that be a floor creation for Germany? How does Germany benefit, if at all, from that global narrative?
Yeah, what we see also in the aftermath of the supply bottleneck crisis that we had in the past 2 years, we see some slow structural change or an adjustment to be more independent of the world economy. So we still have to rely on strong exports. So this is our business model, so to say, in Germany. But the last 3 years have learned us the lesson, or the German economy a lesson, that we should adapt and also be more diversify our economy, our supplies. And this will have to be strengthened or have to go on further in the upcoming years. Yeah, you're right in this case.
Okay, Klaus, thank you very much. Klaus Wohlrabe, Head of Business Surveys over at IFO. Coming up on the show, the big breaking news from BRICS. They're getting bigger. And we look at the expansion story and the global influence the new members like Saudi Arabia will add to the group, right here on Bloomberg.
Today, Bloomberg is live from the annual Jackson Hole Economic Symposium. Our expert team speaks with Fed presidents and other economic leaders as they deliberate the shifting global economy.
What is the response mechanism?
It's not how fast we do it, it's where we go.
Tune in for continuing coverage with a special edition of Bloomberg Surveillance live from Jackson Hole starting at 8 a.m. Eastern. Bloomberg, your global business authority.
The conversations that matter, the insights you need right here on The Pulse. I'm Manish Krenny in Dubai. The BRICS bloc of emerging economies is expanding for the first time since South Africa joined in 2010. Saudi Arabia, UAE, Iran, Egypt and Argentina and Ethiopia have been invited to join the group in a push to expand its global influence. Bloomberg's Jen Zabazaja has been tracking the story all week from Johannesburg, where the summit has been happening. Jen, what has been the reaction to the selected list of potential new members? We've had a tweet from the UAE leadership, but nothing so far from the Saudis, unless I've missed something. Good morning.
Morning, Manus. No, I don't think you have. I mean, a lot of the reaction is still sort of mixed at this point in time, right? I mean, you look at this group of 6, and they're all a bit different, and sort of what the collective response has been is that these groupings could help the BRICS bloc really with their influence and their power on the global stage. Of course, they could they're projected to be an expanded GDP surpassing that of the G7. And we heard that from a number of leaders yesterday who were here in Johannesburg. President Xi Jinping saying that the expansion is a new starting point for cooperation. Narendra Modi saying that it gives the shared efforts new impetus. But as a lot of people have talked about that, they're also talking about a lot of the skepticism that is now arising from this grouping. The original BRICS bloc already had some divisions and some tensions within them, right? So China and India had their own divisions, and they had a standoff over the border. Now you take a look at the countries that are being added. We have Egypt and Ethiopia that have been sort of in dispute over a dam. Until more recently, Iran and Saudi Arabia had considerable tensions. And Argentina, although we did hear, welcome from the country's leader at this point in time, they have an election later this year. And there's concern that potentially there could be a new administration that is not necessarily so pro-BRICS. And so, there's still a lot of questions about what this grouping of countries is actually going to be able to do, and also what they could potentially do to the energy supply chain in the world, right? As you mentioned, this is bringing in some of the biggest energy producers in the world with some of the biggest consumers in the world. So what could that mean for the dollar? We've heard leaders talking all week about wanting to trade more with local currencies. So do we eventually see that happening? So a lot still to pay attention to. But yes, this is a very disparate group of 11 countries.
But then you think about some of the biggest products that go from Saudi Arabia and the UAE into China. It is oil, it's in dollars. And we've had all the speculation, of course, between the UAE and India. Would they dare to price the oil exports to India in rupee? we can maybe put those questions to some of the ministers when we catch up with them. Talk me through the criteria that these countries are going to have to meet to join.
Yes. Yeah, and Manas, I'm glad you said that, because these countries, now that they've officially been invited, but they still need to review the terms of the declaration that the original 5 BRICS countries made, and then be officially sworn in, accepted into this BRICS bloc. And so some of the criteria that we heard from the experts on the ground was that they needed to be from the global south, they needed to be in good standing, and also we spoke to the foreign minister of Brazil. Take a listen to what he said he and his colleagues came up with.
One of the questions is the reform of international governance, reform of Bretton Woods institutions, and also reform of United Nations. So all those questions are expressed in, let's say, a long list of positions and issues where those countries, the original 5 and the new countries, must have a common view of these points.
And in addition to that, Manas, we also heard them talking about how these new countries will need to reject unilateral sanctions, which is something we've heard these countries talk about. And the door is still open for other countries to be added down the road. But the idea is that they are all in unison with these specific points that the foreign minister was making there, and what we'll hear probably down the road.
Okay. Jen, thank you very much. Jen Zabazadeh tracking the BRICS summit throughout the week. You can have a rest now, glass of wine, put your feet up, you've done the hard work. News this morning is that China has unveiled yet another for easing in its mortgage policies to halt the slump in its residential property market and revive the growth in the world's second largest economy. Let's get to our senior reporter for China, James Mega, in Beijing. James, what exactly is the new policy, and will it give the kicker that they hope for?
So the new policy that was announced earlier today is basically allows people who previously had a mortgage, have then sold their home, to be seen as first home buyers, and that allows them to get lower interest rates on the mortgages, and it allows them to pay a lower down payment. So previously, if you'd owned a home and then you sold it, and you wanted to upscale to a bigger home, for example, you would be seen as someone who already had a home, and so you'd have to pay a higher mortgage, you have to pay a higher interest rate, and you'd have to put down as much as 80% of the price of the house as a down payment. And these are attempts to stop property speculation, especially in places like Beijing, Shanghai, Shenzhen. And what this rule now is, if you own a house right now, you've paid off your mortgage, you go and sell that house, and then you borrow money to buy a bigger house, or you borrow money to buy a better house, for example, you can be treated as a first home buyer. But the issue with this easing that's being put in place is it really only going to have effect in the bigger cities. Because all the smaller cities across the country have leeway to already set their mortgage policies, or that they have the leeway to enforce them or not. And so a lot of these smaller places that have seen the worst falls in housing prices, the worst falls in home sales, have already basically allowed this kind of thing to be going on for quite a while now. And so this rule change is actually just going to sort of regularize what they're already doing. And so the places that are really going to see an effect from this, or possibly see an effect, will be Beijing, Shanghai, Shenzhen, Guangzhou.
And we've got the Chinese regulators. They're going to meet with some of the asset managers today. Just briefly, what's the top line of the plan?
I'm sorry, I'm not actually aware of that issue. I mean, I just saw a few headlines crossed, but I haven't been following that question.
Listen, no problem at all. Let's see what more they come out with. I mean, they come out with many plans. Let's just see what the details give us. James, as you say, 80% down for a second home in Beijing. That is a belter. James, thank you very much. James Mega there in Beijing. Coming up on the show, Michael Jordan, he made his billions. He becomes the richest basketball player of all time. Our sports correspondent, Greg Tanner, joins me next. The conversations that matter and the insights you need. It's The Pulse. I'm Manish Cranny in Dubai. It's official. Michael Jordan is the richest basketball player of all time. That's according to the Bloomberg Billionaires Index, which is calculating his fortune for the first time. Let's get more with our executive producer and resident sports correspondent globally. It is Greg Tanner. And in a former life, he was a basketball journalist and a commentator. And at 5 a.m. in the morning, most days, he does still continue that role. He's interviewed Jordan himself. Good to see you. I mean, this story, it popped as soon as I came in. Look, he is the greatest. That's undisputed in terms of basketball. But now he's the richest.
I wouldn't say it's undisputed. It's actually a debate that rages across the world every single day. Is it LeBron James? Is it Michael Jordan?
Depends what day I come in and talk to you, which one you're glorying.
Well, I mean, I have my own belief in that, but I won't mention that. But what is not up for debate any longer is who the richest is, because Bloomberg has done the maths for the first time, like you say, and they're putting the figure at $3.5 billion. So where did that money come from? Mainly from his sale of his stake in the Charlotte Hornets basketball team earlier this month, for which he got $3 billion, a massive increase from the $270 million that he paid in 2010. So that's where the majority of this wealth came from. But where did he get the money in the first place to buy that stake? Yeah. Mainly from the licensing agreement that he signed in the 80s with Nike, which is legendary.
Well, let's talk about that deal, because actually we were chatting on the IB just throughout the show, and I find some of those stats, and they are quite staggering. Where were you in 1984? Don't worry, we won't go back that far. But it was 1984 when that deal was signed. So just the evolution of that.
It was arguably one of the best business decisions in the history of sports. Michael Jordan was coming out of the University of North Carolina. Everyone knew he was a good player, but he was not a household name. Nike were taking a punt on him blowing up and, promoting their brand. Yeah. And he was taking a punt on Nike. They were a small player in the basketball space. Converse and Adidas were way ahead of him. Anyway, as part of the deal, he agreed to take a percentage of some of the sales. Nike hoped that within the first few years, they'd do $3 million of sales. They did more than $120 million in their first year.
And what is that number now?
Now, Jordan Brand last year accounted for $5.1 billion of Nike's sales, which represented about 11% of all their revenue. Bloomberg is estimating that it's a wild speculation, has always been around for 40 years, how much is his stake? Bloomberg has used the calculation of about 5%. So he is raking in 5% on $5 billion worth of sales nearly 40 years after he signed that deal. It's unbelievable.
And yet you look at the contracts now with that Beckham is signing in Miami with various football players, and it is all about the percentage from the brands that those individuals are potentially going to earn. So you need to declare, not your tax status, how many Jordans have you got? How much have you contributed to the overall wealth pile of this man and detraction of your own?
I have certainly contributed. over the years, maybe 100. Currently, I've got maybe 40 sat at home.
What's the most expensive pair that you have?
I have a pair that I queued up outside Madison Square Garden for in 2015 in minus 20 degrees that I've never worn. That I'd probably get $5,000 for them if I sold them.
Bet you don't regret a minute of that queuing up, do you? No. Well done. We'll continue the stories on Bloomberg on the Pulse. Greg Tanner, our resident sports correspondent and executive producer of Daybreak, Middle East and Africa. Just a reminder, full coverage, Jackson Hole. We are revving up to go. It's the Economic Symposium. It's the highlight of the bond market's dream. This is where dreams come to be shattered and hopes are raised, that we are at the peak of the rate cycle. Will pause be the tone and intonation from Jerome Powell? Christine Lagarde might just be the more important conversation on Bloomberg at 9 p.m. tonight.